Thank you for joining. I'm actually out here. If you take a look, and there's Leone. Everybody say hi to Leone. I'm here in Reno, near Lake Tahoe, visiting some friends, and I can just tell it's hard to breathe. We just got done doing a really tough workout. Yeah, I know. And I was super gassed from that workout. But anyways, thank you for joining my live. I just did a video about the difference between private money and hard money lenders and why we like private money. So if you're joining, thank you for joining. Let me know what city and state you're from. If you're doing real estate, I'm going to spend about 15 to 20 minutes chatting about why private money is the way to go versus hard money. Now, look, hard money is good in some cases, but private money is really the best way to go, especially if you are just starting out, because, when you're starting out, you don't really have that much money, right? And so you want to recoup all of your cash that you're making from wholesaling so that you can scale and hire people, right? And hire sales staff, hire administrative people, so that you can start scaling. So you want to keep as much money as possible. And one of the big differences between private money and hard money is that with private money, they want you to have skin in the game. Skin in the game. You've heard the term. They want you to invest into the deal as well, because they don't know you. They're taking a chance on you. With private lending, it's a relationship-based loan. These are people that, or either like your friends, your family, your doctor, your dentist. They know where you live. They know what area you're investing in. They could be your neighbor, so they know you. It's a relationship based. You already have somewhat of a trust. So if you're using private money, it's going to be with an individual. Hard money is more of a business. And when is it good to use hard money? Okay, if you're doing really higher end deals. 500, 600, 700, 800K type deals. And the majority of those type of deals are going to be in like California, Washington, New York, and some markets like Arizona, where you're going to have to use hard money because you're talking about 300, 400, 500, 600, and they have unlimited money. They have a lot more money than an individual would. So that is more relevant to hard money versus private money. Private money, we're talking about markets like Columbus, Ohio, where you can buy a duplex for $150K or less, where you can buy a house and be all into it for $80,000 or $90,000. So that is the biggest difference between that hard money and private money. And why we like private money, guys, is because it's super flexible. You're dealing with an individual. You're not dealing with like an institution. We're talking about, somebody that saved up a bunch of their money that they made. Leone's looking at you guys. Oh, we got somebody from Virginia. Dave P's in the house. Make sure you're following Dave P. He's going to answer any questions that you guys have here. Dave and I have raised north of $20 million documented. In our first 5 years, we didn't really document a lot of our private money, but now, we have got close to about $10 million on the streets, whether it's going to be for a flip or buy and hold. And it's all good debt. We talk about how to leverage private money to go and do the BRRRR strategy. It allows you to buy multiple properties a month. And if you have a really good team, especially in property management, you can do this over and over again. So back to my question about why we like private money. They don't charge you they don't charge you fees, okay? Hard money, you're talking about, draw fees. And draw fees are when you need a rehab draw to go fix up the property, there's like a transaction fee there, okay? Another fee is like an inspection fees, because they're gonna have to go verify that the work is being done there. With private money, you have complete control of the deal. It's your deal. They fund 100% of your purchase and rehab, and then you go out and do your business. They just want to know that, they may request some pictures. We give updates to all of our private lenders on how the projects are going, but the majority of it is hands off. They're not going to bother you. Like, they can technically drive by your house and see, how you're doing if the private lender lives in your area, but a lot of them A lot of our private lenders don't live in our state. Some of them live, out of state in other markets. So another fee that you potentially will have with hard money is a broker fee. They got to get paid. They're sourcing capital from all these other sources. So they're going to charge you that. They're passing that cost to them, to you. So again, private money, no fees, very flexible on the back end too. When, let's just say, if you wanted to have all of your payments on the back end, like they're accrued, you can structure it that way. Sometimes a private money lender will want to bring in another, another investor into the deal. So that's, they can structure it to where two people are part of that one loan. So there's a lot more flexibility with private lending. On top of that, guys, private lenders' rates are very, very, cost effective for the deal to make sense. 8, 9, 10% is what private lenders are going to ask. Because guess what? Their money's in the bank. And if it's in the bank in a savings account, they're losing money. They're not getting the returns that they could be if they're investing it into a cash flowing real estate. And the risk is actually a lot less. With hard money lenders, they're going to charge you a little bit more because they don't really know you. It's not a relationship, they're a business. So they're going to try to mitigate as much risk as possible. Make sense? So awesome. We got Virginia on here, North Carolina. Thank you. We got Juan on here from Mexico. I'm sorry, from you might be from Mexico, but in Mexican Sly. Thank you for joining. Do you use more than one private lender for more than one property? We don't. It's one lender, one house. Now, we haven't had to. There's syndications and stuff like that. We don't do that. It's one property, one lender. In the event, if we have to get two lenders involved, it's typically like an IRA. They're both going in on an IRA. But majority of our deals, one lender, one house. Keeps it clean, keeps them protected, so that if something goes wrong with that property, you're not dealing with two people making decisions. Make sense? Hey guys, I want just to show you the background here. I'm in I love this area. I'm excited to kind of explore a little bit here in Lake Tahoe. We're in Reno. We're here with our friends that moved out here, and so it's good to be in a different kind of different climate, different environment. I was doing a workout today. It was like hard to breathe because we're out so high in elevation. All right, let's answer some more questions. And guys, tap on the screen. I'm trying to get, let's try and see if more people can join us. Let's get to like 50 people on here, and just share it with somebody. This is really good stuff that I'm sharing with you, because a lot of times, a lot of people get it confused with private money and hard money. And I broke down on a 1-minute video as best as I could. You're probably gonna wanna pause the screen and just look at all the differences between hard money and private money, okay? But let's see here. What's a good interest rate on a private lender? So guys, a good interest rate with private lending is gonna be anywhere from 8 to 10%. Our lenders get 10%, sometimes they get 12%. We wanna take care of them, because look, if you take care of your private lenders, you're gonna be able to be in this business for a long time. And that's how we scaled from 20 something properties in our first year to now over 140. And we're doing a really big deal right now that is a package of homes, and it's all from it's private lending, private money lenders that are in that deal. It's one lender as well. So what should be my first real estate invest? Well, if you're getting started, I can talk about getting started. So what's up, John? I see you. You guys got to go follow John as well. Good dude. If you're just getting started, your main objective, your main goal has got to be, how can I get in front of as many off-market motivated sellers as I can? Because without that, you don't have a business. You need to get your marketing together. You need to understand it's the concept's called wholesaling. You need to get in front of motivated sellers, get it in contract, understand what a good deal, what a bad deal is, and also understand how to calculate rehab over the phone. We share all of that information on our community. So if you want to join our community, send me a DM and send me a DM with community, and I'll send you the link. Okay. Thank you for the follows, guys. Thank you for the shares. And thank you for the questions. So the more questions, the more taps you give me on the screen, this gets out to more people. And we're here to educate and help our community, and we appreciate you following us. Dave's on here too, and he can answer any questions as well. I wish I could get him on live here. Let me try. I don't see him on. Okay, it is what it is. So let's just go to the next question. Can you get a hard money loan in your first deal? You can. Now, if you're going to do that, just make sure that you have enough. They're going to charge you 10, 20% because they're not going to fund 100% of the whole deal. So they might fund 100% of the purchase, but only 80% of the rehab. So, for example, if you need to borrow $50K, 25 of that would be your purchase, and then another 25 of that would be your rehab, where they're going to lend 80% of that 25K for the rehab. Make sense? That's why we don't really like going with hard money, is because we want to leverage as much of the 100% purchase and rehab. Okay? You know, we want to keep our capital in our business for more marketing. You know what I mean? We want to be as liquid as possible. Hi, what's going on? Jay every day. I think that's Juan, right? Okay, so can you get a hard money loan for your first deal? I'm a wholesaler. Look, you can. Just you got to understand that the hard money lender is probably going to charge you a little bit more than what a private lender would. So if it's your first deal, do it to get the deal done, and then document your deal so that you can have a credibility packet, so that when you get in front of a private lender, turn off, accept. Oh, what's up, dude? You want to hop on here? We got Mr. Burr. Mr. Burr, the man, the myth, the legend. Mr. Burr is in AZ, and he's got a very interesting way of doing deals. And if you can join, if you want to join here, man, I don't know how to do it, but I guess I can. Here we go. I invited you. If you want to join, we can chat. So thank you for the follows, guys. Since I got no company name, I can put my name on a wholesaling contract. Correct. You can use your name. This is a wholesaling question, guys. So thank you for that question. If you don't have an LLC, you can wholesale in your name. Okay. Do that until you can get enough capital to go get your LLC. I think it's like $300 to get your LLC. The reason why is you want to protect yourself a little bit. What's that? See, Leonie knows. Leonie knows. She says, get yourself an LLC. What are the best books? Guys, I read a really good book recently, audio. It was, I think it was by David Green, and it was the Burr book, Buy, Renovate, Rent, Refinance, Repeat. There's some really good stuff about how to manage contractors remotely. That's one of the best things I got out of that book. So go check it out. So I got no company name. Okay, sorry, I already answered that. Tell us, after we live in an FHA loan for 1 year, we ask for another loan, and what happens? So this is a good question. This is talking about how many times you can use an FHA loan. You can use it more than once. It has to be, from what I know, you have to live in it for 1 year. And then after that, it has to be a property that's a little bit step up from the one you're living in. But you can use the FHA loan. And it's a powerful strategy called house hacking. As you guys saw my last video about that. Dude, if I would have known about that, I would have house hacked my first several properties, you know, where you can live in it. Because guess what? Before the family, right? I was single, partying too much, but I was doing real estate. I would have lived in 1 unit. 3 units I prefer 3 and 4 units because, you know, with a duplex, you can probably just live for free. But in a 3-plex or a 4-plex, you can have your renters pay you every month. One of them is going to pay up your mortgage, and then you cash flow the rest. Anything going on this Friday? Yes, we're gonna have a call on Friday. and we're gonna go over what we shared. So guys, here's what's going on in our community. It's only $17 for the first month. After that, it's $97. Dave and I are sharing all of our resources and tools of how we built, from scratch. No handouts from parents, no SBA loans, nothing. From scratch, a portfolio that's worth north of $30 million. It's 140 something odd units that we have, and we're buying more every month. We're breaking down strategies of how we're raising capital, how we're taking down deals, we're doing deal reviews. And on top of that, we're breaking down what we're using in our business today, the KPIs that we're tracking, the scripts that we're using, and basically how we're doing it all virtually. We don't have an office anymore. We're all doing it virtually. Now, we are getting an office because we want to get a studio for our podcasts and stuff like that. So anyways, help finding private lenders in Virginia. I go over how to find private lenders in another video, but you can basically start looking into real estate investor association clubs. It's a good way to find private lenders there. You can go on Facebook real estate groups. You can look into your network, talk to your doctor, talk to your dentist, individuals that have, that you think may have some money, right? Because I'm not going to go, you never know, but you're not going to go ask your buddy from high school who probably is not, like, you don't think that he's probably doing anything with his life. A lot of our private lenders are, high net worth individuals. So that's where I would start. And then a lot of our private lenders that we've found are actually in healthcare, doctors, dentists. That's a lot of our private lenders. So let's see, guys, like you are a rock star. Oh, thank you for that. That really means a lot. It really does. I get a lot of value anymore from helping people and seeing them succeed. There's a guy that sent me a DM the other day. He did a deal, one of his first real estate deals. He does a lot of crypto and trading in stocks. And he did his first deal and made like $18,000 off a deal like that. It's amazing. And I think we're gonna do an interview and ask him how he did that deal. So I want to share that with you. If you guys are doing deals and you're following us, let me know. Send me a DM, and we'll get you on our YouTube and ask you some questions. And you can actually ask us questions as well. Get some value from it, okay? So that's good, man. I appreciate the shares, the follows. My two favorite TikTokers. It's awesome. Thoughts on house hacking a 325 duplex with potential cash flow. All right. So how much can you rent, or how much can that one side rent out for? And can that one side, after you pay, your taxes and all that, is it going to cover your payment? That's how I would look at it. So 325 at that price point, I believe it still qualifies for an FHA loan. So you can use the 3.5% down payment. But guess what, guys? So on top of that, there's Bank of America giving out $17,500 for down payment assistance. There's coming out, there's that $25K down payment assistance. There's a lot of down payment assistance right now, especially if you're a first-time home buyer. You guys got to check out the programs that are available to you so that you can utilize that strategy to get your first deal. Basically paying for your down payment to get that duplex. Any more questions, guys, about private money, hard money, anything like that? I want to answer those questions that you guys have. And if not, go to my video, take a look at it. And if you have any questions, then let me know and I can answer you. I still have a delay in my questions, so I apologize. I'm not seeing them live right now. What's best, I think, is you can use the Q&A feature on here. With FHA Rehab, this is a good one. With the FHA Rehab loan, you must live in the house. You must live in the house. Don't get caught being shady. Awesome. Dave's answering some questions as well, guys. Thank you for the shares, for the lives that are being shared. I appreciate you. It helps get our live out there, and hopefully someone gets value from this, because that's what we're here for. Big deal on Crowd Street. First 25K, 320 unit apartment. Thoughts on real estate crowdfunding, guys? I think real estate crowdfunding was hot back in like 14 and 15. I haven't really seen, because we don't use it, but I haven't really seen it come out anymore. Like I haven't seen that many companies do it, but I'm sure it's being done. Hey, if it's another way for you to leverage and getting, single family homes or small multifamily and large multifamily, do it, right? Do it. That's the best play right now. Dave's gonna come out. He's got some really good insight on why you should be investing in cash flowing real estate right now. Why it's a good hedge against inflation. Why to do it now? Because of all the loan programs out there. There's a lot of money on the street, and if you can do this one thing, if you can get off market properties and get really good at that, you're gonna come out ahead. Those off market properties in the next 5-10 years are gonna be 3 or 4 times. It's going to be worth 3 or 4 times more. We have a house, guys. Let me tell you a quick story. We have a house that we did owner financing on. Okay, we sold it as a rent to own. So what we do in one of the ways that we, how we do our rentals is we do rent to own, where the person that we're doing a rent to own on has really bad credit to a point where, they have really bad credit, or they don't have credit at all. And so what we do is we offer this rent to own program where they can eventually own the house, and it's based on their the income that they're bringing in. So we just want to make sure that they can afford the payments. So guys, share this live, because I'm going to go over this really cool story. I want everybody to know about this, because guess what? This resident that did the rent to own 3 or 4 years ago now has $100K in equity. That house that they bought, at the time we bought it and sold it for like $60K and did the rent to own on it. Today's value is close to $170,000, and they're cashing us out. They're paying us cash, $60K, and getting $100K in equity in that house. Isn't that a beautiful thing? This rent to own thing is what we do. We help, we help people get into home ownership, right? And if their credit, a lot of what who we deal with is, a lot of construction people, a lot of people that have a bunch of cash, right? They want to, they just want a house. They're really good savers. And so we use that rent to own strategy to get them in this house. We're going to probably break this down as like a deal, kind of case study. I'm so proud of that. That's, a lot of people think that landlords don't provide any value at all, and it's completely false. Like, we're out there providing housing, right? So, and then on top of that, we're helping people that don't have the best credit get into homes. So anyways, that's my quick story. If you have any questions about that, let me know. But definitely share this live and continue to tap on the screen. It helps. It's helping. It's helping get this in front of a lot of people. So I appreciate you. Do you ask for more money than what the deal is worth to help fund repairs, nothing out of pocket? That's an amazing question. So why is it a good question? So if you can structure your deal correctly with your private lender, you can pay yourself a modest assignment fee. Why do you want to do that? Is because your acquisitions company, right? You have these 4 departments. You have the acquisitions, dispositions, property management, and accounting, right? Your acquisitions company is working really hard to get marketing out there, pushed out, and talking to motivated sellers, right? If you don't pay yourself upfront on every deal and only pay yourself at the end of the deal, that acquisitions company will probably go out of business. There needs to be more gasoline and fuel pumping that out so you can get more deals coming in. And as they're doing that, these are salespeople. Salespeople need to get paid now. Otherwise, you're not going to have salespeople. You're going to be doing it all yourself. So that little bit of an assignment fee or a finder's fee, whatever you want to call it, up front when you're structuring the deal, allows you to continue to put out marketing, pays for your sales staff, and pays for overhead. Okay? A little bit more advanced. We can go a little bit more in depth on that join the community, send me a text. Community, send me a DM. Community, I'm going to send you the link that you can join. It's only $17 a month. I'm sorry, $17 for your first month, and then $97 after that. And the value that you're giving is way more than what we're charging. We're talking about we paid well north of $100,000 for our education, and so really we want this community to grow because we're wanting to see a lot more people join at that price point. And also once that group is at a certain size, we'll probably just cap it off because we want everybody to interact and get a lot of value from it. So we don't want to destroy the integrity of the group. How long do I have to own before I can sell a house? If you want to, all right, hang on a second, guys. I'm losing connection. Let me know if you guys can still hear me. And then also too, if you're just joining, what city and state you're from. Let me know if you're in real estate. We're talking about private money and hard money. I just did the difference between hard money and private money. Did a 1-minute video about it. Pause the screen if you're gonna look at that video because there's a lot of notes there. Do screen capture so you guys understand it. And then if you have any questions, just give me ask the questions in the video, and I'll probably do a reply video. Okay. What state do you recommend to invest? Landlord friendly states. Most red states are like that, right? Even the southern belt, the southern states like Florida, right? But mainly what you want to do is stick to affordable housing markets because in the affordable housing market, you're going to have access to way more renters, way more buyers, and a lot more inventory, okay? Let's see, off and on. All right, you guys can still hear me? Sorry about that. I'm in saying lost connection, good connection. Let me just make sure that I have it on the highest setting. Okay, cool. Oklahoma's in the house. We've got Hollywood, California in the house. Anybody in Reno, Lake Tahoe? Anybody here from that state region? I wonder if TikTok lives push it out to people locally. Anyways, gun garage each potential $1,500 rent, cover 15. Wow, that's a good deal. $1,500 in rent, your FHA loan. Let me do the math on that. I'm located in Columbus, Ohio, by the way. But right now I'm in the beautiful state of Nevada, hanging out. And the audio is good, video is freezing. Okay, good to know. What do you think about New York? Oof. It's a non-landlord friendly state. They have rent control there, guys. So it's just tough to be an investor there. Put my glasses on, guys. I can't. I'm gonna pull this inside so that I can get a little bit better Wi-Fi here. I'll go on for another 5 minutes and then we'll take a break. So my wife bought a house for $180K. It's now worth $280. Congratulations on that, at least. Should we refinance? What do you recommend? What's your goal? Are you refinancing it so that you can pull some cash out so that you can go buy more investment property? Is that the play? Or are you doing it, like there's just what were you going to do with the money is my question. 'Cause it's going to be tax-free. So if you're going to invest it back in your business, that's a good play. If you need cash infusion in your business, then do it. You guys can still hear me, right? Okay, good. Toronto's in the house. We got some Canadians. John, thank you. Greetings from Turkey. You just posted a vid. Cool spot. John's a traveling investor, guys. Go follow him. He's got some interesting videos. He's also, John, you should join the community, man. I'm sure you got some really good insight. We'd love to have you, by the way. I'll see you soon, buddy. Be safe. Does Canada work? Yeah, you can invest in Canada. You can do the burst strategy there. You can wholesale there. I would just check and make sure if you're going to use our contracts, which if you want the contracts, you can just text contracts to 614-810-4622. We can get you those contracts, but you got to make sure you're taking those contracts to a real estate attorney in your area. Check this out, guys. Look at this view back here. It's a mountain. I'm excited to kind of explore today. I don't know if you guys can see it tonight. Yeah, doesn't do any justice on the phone. It's really pretty out here. All right. Want to take the cash out, buy a property, but not sure how to do it. Well, they'll probably give you 75% of what that house is going to appraise for. So if it's still a good idea for you after that, if it's enough money to go buy another property, then do it. 280, whatever 75% of 280 is. Let's see here. San Diego's in the house. I bought a house. Yes, I want to take cash. Okay, I bought a house in 2004 in New Jersey. All right, had to sell and split the profits with the ex-husband now. Yikes. You not too happy about that, huh? How to stand out in a saturated area? Good question. This is how you stand out. You got to be willing to do things that most people aren't doing in your market. So, for example, if everybody's doing direct mail, do something different, like cold calling. If everybody's sending text message, maybe don't send a text message, do ringless voicemail, okay? I would definitely, this is ballsy. Dave did this back in 2005, right? I would go door knock. Door knock. Why? Most people don't have the balls to do that because it's up front. It's right direct to the motivated seller, right? Do that. Or have your cold callers be snipers. That's what's working for us. Our cold callers are getting really good deals. Can't use an FHA loan. What's my next? Can use a VA loan. You checked into using a VA loan. Obviously, you got to be in the military. What about, again, private money or hard money is the way to go. If you can't use any of the conventional loans that are out there or the loan programs that are out there, try using a hard money lender. Scared to buy my first property. Don't want to lose my money off. Look, if you use our formula, which is after repair value minus 70% of that, okay, minus repairs, minus your fee, your assignment fee, is your max allowable offer. You're buying it at a discount. Don't be afraid to buy properties at a discount because guess what? If you don't want to deal with it anymore, you can always find somebody that will buy it from you and you can make a profit. You got to take that first step. I was scared to wholesale. I had no idea what I was doing, right? You just got to want it more, man. I know it's probably, I don't know if that's going to help you or not, but look, if you buy it right, you're not going to fail. Okay. They only fail if you quit. Thank you for the follows, guys. This has probably been one of the most successful lives, so I appreciate you sharing, tapping the screen, and answering and asking questions. Really, really engaging and all that. So, what about apartment buildings in Victorville? I don't know where Victorville is. What state is that in? Want to buy a home and don't care. Don't want to, okay, sorry. I'm reading these as they come in. I want to buy a home, but don't even know where to start. I would start by looking at homes in your current market, okay? Don't know where to start? Drive around your area. Look for properties that are boarded up, high grass, are boarded up. The windows are boarded up. There might be a ton of trash on the lawn. Siding might be falling off. Roof, there's a tarp under roof. Those are all distressed properties. Find out who the owner is. You can actually, so guess what? Go to our website, risewiththecream.com, enter your email in there, and you can download our script that we use, that our cold callers use. Use that script to engage that person to see if they're interested in selling their house. So that's how you can start today. You can literally just hop in your car, drive around the area, write down addresses, figure out who the owner is. There's free, there's True People Search, which is free, but sometimes it's not as accurate. So I would use Batch, and we have an affiliate link for Batch. It gives you, I think, 7-day free trial. So you can use that. See if you can tie it up in contract. We've got contracts on our website as well. So 75% of 280K is 210. So I would refinance and that bank will give me that money. Correct. They'll give you a loan. And if you have, you said you're all into that for 180. They'll pay off your past, mortgage or whatever on that loan, and then you have that spread, and it's tax free. You can do whatever you want with it. Way to raise rent on long-term rentals. Got Callie in the house. Awesome. Going to Vegas. So somebody's going to Vegas. What's up, Christy? Be safe. Thank you. I've been self-employed for 2 years. Is there a workaround for the 2-year rule? I think you're going to have to. I think there is a workaround. I saw it somewhere. Check with your loan officer, your mortgage banker, whatever. There's a way around it. I just don't know offhand. Dave, do you know if there's a way around that one? My concern about that is the rehab's boarded up house. My concern about that is the rehab on the boarded up houses. Yeah, it's always a concern, There's usually stuff that could come up on a rehab. That's why we always preach, don't take on a big rehab. Wholesale that to somebody that will. There's usually a flipper out there that is waiting for you to give them a call because they are having trouble, just like everybody else, finding off-market inventory. They're not getting on the MLS. If you're buying on the MLS, you're overpaying. So you're very valuable right now if you find off-market inventory and get a hold of them. Been self-employed 2 years. Awesome, guys. This live was awesome, amazing. I'm super thankful you guys are sharing this and got a lot of people on here. Thank you for joining. I'm going to answer some more questions here. I'm new to real estate investing. I have a fully paid off house worth $200K. What should I do next? So if you're new and you need capital, you need a capital infusion, you can refinance the house if you want, or if you already have money coming in from your, W-2 job or whatever, then you don't have to do a refinance to free up cash, right? So it really depends on what you're going to do. Are you going to be flipping houses? Are you going to be buying holding houses? We do both, and we can help you do both, okay? Single family, multifamily, or duplex plus units. I don't know what your question is. Which state do you recommend buying? Landlord-friendly states, red states. Those are all the states I recommend. I think Las Vegas is old news. We're buying homes now. I don't think it is. I think it's probably in some pockets. There's probably some oversaturation, and maybe the margins have compressed. But I know people that are making a ton of money in Vegas, doing like 100 flips a year in Vegas. Now I don't know if they're actually being able to buy and hold there, because I don't know what the rental market is, So I know a lot of West Coast people flip in the West Coast because the spreads there are better, and then they use that money and they go to the Midwest and they buy rentals there. That happens all the time. A lot of 1031 exchanges coming from California to the Midwest. How are you finding your MLS properties? So if it's an MLS property that we're going to buy, it's probably a realtor that we know that knows that we're a good cash buyer, that maybe had a deal that fell out of contract on the MLS with the buyer, and we're their backup offer. We don't find any really good deals on the MLS anymore. That was back in 2008 and 2000. Our website, guys, is risewiththecream.com. If you want to join our community, text community to 614-810-4622. 810-4622. 614-810-4622. No, Victorville is, man, a lot of questions. Awesome. You guys are really active today. Appreciate you. Seattle area is expensive right now. Want to, but scared. Yeah. I would wholesale there. Wholesaling has the least amount of risk because all you're doing is tying up the property and then assigning your equitable interest to an end buyer. So if you're kind of iffy about that market, that's what I would do. Find a motivated seller, get it in contract, mark it up 30, 40, 50K, and that end buyer probably would be ecstatic buying that property from you. Guys, I appreciate all the love, all the follows. Definitely take a look at that private money video that I did. It has a breakdown of the advantages of using private capital, the advantages of using hard money. And guys, join our community. We're going to be doing live breakdowns, deal reviews of how we are structuring our deals, how we found the deal, how we found the private money, what we're doing to our exit strategy. It's only $17 for the first month, and it's $97 after that. If you're wanting to scale your real estate business, get there. I appreciate all the likes, the follows. Man, feeling the love today. Feeling the love today. How does rehab get done? I don't know anything about construction. Look, you're gonna have to hire general contractors. Okay, don't do the rehab yourself. That's a mistake. A lot of people, unless you're in construction, you will lose your ass off if you do the rehab yourself. How do I know? Because my very first house that I bought, I tried to do the rehab myself, and I failed. And I got into wholesaling. And it took me about 6 months to get back, but I made it. Investors are getting everything right now. Cash is key. Yes, sir. That's why you use private money, hard money. Private money's better, though. You're going to join. Awesome. Glad to have you. You're making a big step in your real estate investing career. Guys, I appreciate the love. I'm going to go live again. I'm out here I'm taking I'm kind of like a vacation, just a breather a little bit to enjoy the view, enjoy some friends. And we're going to go live. If you are part of the community, we are going to go live tomorrow and do a Zoom with all of the members. And remember this, guys. Look, if you're on the fence about doing this, think about what you're going to be telling yourself 2, 3, maybe 5 years from now, because opportunities are coming to you. Like I'm doing this live, that's probably inspiring you because you have set forth this intention that you want to get ahead and you want to get into real estate investing. So guess what? The universe puts things in your way, but it comes as a challenge. And this live right here might be that push to get you to that next level. So thank you. I'm grateful for everybody that's here. Thank you for the follows. Go check out that last video I did and put your questions in there. But I'll be back here maybe this afternoon, depending on how the kiddos are. But appreciate you all. Hey, and go follow Dave. He's at The Real Dave P. And I'll see you guys on the next live.